doing well. It was bank holiday yesterday, and so I wasn't fully focused on the markets. However, our trade of the day did incredibly well. I did take it, but I took profit a little bit too early. I didn't realise it would just be like a freight train, and it was the Aussie Kiwi long, and it just didn't ever retrace. I thought it might have retraced down a little bit for the leg up, but it continued pumping higher and higher, and the logic there was the bubbles. Because the Kiwi was sell and the Aussie was buy, so we pitched as strong versus weak. So that's the logic, and we netted 70 plus pips yesterday. So I'm very, very happy. A bit not angry so much, but sort of a little bit aggravated that I took profit early, but it's still profit. And today I'm going to be fully focused on the markets. Yesterday we had a bank holiday yesterday in the UK, and it could have been quite quiet at the London Open as a result. So the risk calculation is off at the big picture and off at the 24-hour difference. However, the VIX is below its yearly pivot. So for every one person who are shorting, there's 4 people buying risk. So that would be risk off because retail guys are normally counter trend. However, what's happening, I'll show you the indices as we get down there. It looks like we might be teetering towards buy. If we look at the US 30 and the DAX, S&P is sideways though. So currently risk off. However, we are subject to change. That's the important thing. And yields pumped, but this is uncertainty because FOMC 75 basis points or 100 basis points. It's going to be like $1 trillion bet. I don't think anyone really knows for sure. And so this is just them anticipating a what if scenario. And if they do 75 basis points, it's probably going to hamper the USD, and it might weaken, or it should weaken. Even though it's an interest rate hike, it's not as bad as feared, because one whole percentage point is very aggressive, and it should combat inflation, but we have to wait and see. So after FOMC tomorrow, it's all eyes on the CPI next week. And this is absolutely bonkers. The yield's absolutely pumped. The 12-month is now giving you more yield than the 30-year. So put your money near term and then you'll do okay. These are astronomically high. I haven't seen these that high before. So yeah, that's kind of like a risk off sign. And this pumping would indicate a stronger dollar. And the dollar yen tracks the 10-year quite well. If that falls, the dollar yen could fall as well. So keep an eye on that 10-year yield there. Oh, yeah, that's what I've done. I understand what I've done now. Yeah, that's fine. This is wrong, but I needed to paste. I'll show you what I needed to paste. I'll show you the dashboard. It's easier. Just if I just do this. So I'll edit this after this video. I want to show you that metric there, Tuesday. So the reds, indicating that they've gone long. The S&P, UK 100, US 30, German 30, France 14, AJ. So this screenshot here should go there, right? So that's currently wrong. That's just a incorrect copy and paste. So I mean, I could do that now maybe. If you can forgive me for this, I won't be long. Get that out and then paste that in. Paste that in, copy, go back here. There you go. And then view mode viewing. So that's correct now. Okay, so you can see how they've gone long from last week. So there's a weekly difference, okay? So the dollar is mega strong, but however, it's losing a little bit of ground against the euro, losing a little bit of ground against the yen. So that of the two currencies of the whole lot, I would be looking at EU and UJ for signs. And if they, if the yen weakens and the euro weakens, then we can just resume the strength that we've been seeing. NU is the laggard and dollar CAD is the leader. So you can see there. And the dollar yen was the leader, and now it's come over here. So that's very interesting. This is the weekly difference from last Tuesday. The data rolls over. Our trade of the day was fantastic yesterday, and so you'll need to subscribe to see today's trade of the day. And you can see the trade of the day by clicking the Bulletin tier at patreon.com. If you want to access, unlock Discord in its entirety, including our live signals, then you'll need to do basic content, which is still pretty cheap, but very affordable for the amount of stuff that you get. And if you want to get the whole lot of the spreadsheet, Discord and Signals, you can click the FX SSI link or the premium. This is for those who have an existing FX SSI license for their indicators. So you get a discount if you're a customer of theirs. If you're not, you can just go to premium tier, and then it's slightly more. I think it's £5 extra a month, but there are some options there. And that's quite affordable, to be honest with you. It's like less than 50p a day, and you get all this bulletin plus the trade of the day. And we made a lot of money yesterday, and that would have paid for probably for 6 months, to be honest. The amount of money that I made on yesterday's trade would have paid for 6 months on the bulletin tier in one day. And that wasn't even like a large position or anything. So this is S&P. So we are tracking a 21 moving average down. Probably going to be a resistance, potentially up about 3980, maybe. This is how we stand right now. And red is sell, green is buy. And how they're going to move over time, you have to get the trading station and see for yourself. S&P sideways. It might make a risky buy. But we have to wait and see. And however, the US 30 did make a risky buy. So they sold it. And if they continue, then we could potentially cross the 50%. Then we're going to be a buy at the high level. Then it won't be a risky buy. Currently, it's a risky buy because they're net long, 56% long. However, if they reduce, then it's going to be bullish. Okay, so hopefully that's clear. So this is really cruel. So I was saying yesterday that how we would, you'd think that they would bail, they would exit on their positions from a break. We had quite a few respects of it. We did dump quite heavily below, another heavy candle, and then another heavy candle, and then they got out. We rallied a little bit, and they probably thought, it's too much of a gamble. I'm in a horrible loss as it is. I'll just get out. And of course they exited, and by doing so price pushed up, and that's the logic there. So 1, 2, and then 3 is the sentiment. So that tells us what happened and how and why things work as they do, because it's all a trap. Liquidity probe, and then it's going to continue forever, and it's going to hurt and punish retail traders forever. Unless you get, an iron sentiment, and you can be aware of what's going on, how things work. It's incredibly cruel. I said this would happen, and it did. Gold making a risky buy because they're reducing that volume, and so if they continue to reduce it, then up will come. If they go long, then will fall. All right, so it's dead simple. Stop loss cluster update. The largest mover was dollar CAD at 6% shifts towards sell, and Euro USD at -6% shift towards buy. The largest stop loss cluster is there, AU, 665, and the size is 4.30. Dollar yen's size is getting larger, so we might want one last probe, and it's going to be absolutely horrible for those guys. And then that could be the final destination, could in speech marks. So that is getting larger, so they might want that liquidity, because you know how it works, just probes liquidity. Now this is going to improve as we go into London. We have just opened now, so this is like a lure, like a bait to get people involved, and so they get momentarily paid on their positions. And of course, when you get to London Open, this really bumps higher, and then they get squished. So we wouldn't want to enter at 50%. We'd enter much higher at 70%, 80% probability. So hopefully that's clear, that logic. It's very cool. They make it look like price is going to go one particular way, get the retail guys involved, and then it changes very dramatically, and it punishes them. And there's yesterday's signal. 18 past 2, 40 pips. 10 past 3, 58 pips. And then last night at 9 o'clock, 78 pips. Right, so very good, very amazing, and that was from the bubble logic. Technical checks is how we stand right now. Not much to be said about that. EU and dollar Swiss are neutral. And there's the economic calendar. So inflation rate from Canada. So it's going to be a big mover. So be careful with CAD if you've got CAD exposure. And then we're all eyes on FOMC tomorrow. So if we rally today really hard, it's probably setting up for a sell-off tomorrow. If we dump today, then it's going to possibly set up for a rally tomorrow. So you have to think not today, but tomorrow, because tomorrow is the risk event of the week. So I'm going to wrap up now because it's a little bit longer than anticipated because I had to do that editing job. But hopefully you didn't mind me doing that. I wanted to get it done properly. So there's the links. Click those links and you're welcome to join. Do know that if you sign up, you pay today and then you pay on the 1st. So it might be worth you waiting for October. It's up to you. So have a great day, and I'm going to do a quick 2-minute video for the private feed now.